National Social Security Fund has won a tax dispute in which it had been challenging a 42 billion shillings levy on savers' interest payments. In a drawn-out case battle since 2013, NSSF, which lost at the Tax Appeals Tribunal and subsequently ordered to pay 42 billion shillings, while the Uganda Revenue Authority appealed the decision of the Commercial Division of the High Court. Justice Boniface Wamala set aside the tax tribunal ruling, said, "The interest paid by the appellant to its member is declared a deductible expense for income tax purposes. The appellant is not liable to pay the principal tax assessed by the 30.5 billion shillings. The appellant is not liable to pay the penal tax or interest of 12.1 billion shillings. The dispute arose out of a decision by URA in November 2013 to subject interest paid to NSSF members to tax. This, however, was a departure from URA's own earlier position contained in a November 1, 2011 letter which had advised NSSF that the interest paid to members is allowed as a deductible expense for income tax purposes. NSSF, while at High Court, urged that this has an obligation to pay back contribution plus interest to members, noting that the tax would have a huge cost on members' contribution. On the other hand, URA urged that the interest referred to under the NSSF Act constitutes a return on investments and thus their expense incurred on this regard is not deductible. Mr. Patrick Ayota, the NSSF Deputy Managing Director, said if URA had succeeded, the fund would have been paid savers 30% less of the interest declared, 10.75% this year. Meanwhile, URA, in a ruling delivered by Asa Mugenyi, the Tax Appeals Tribunal chairman, lost a tax dispute worth 106 million shillings against the Bank of Uganda. Represented by Mrs. Ruth Sabatindira and Mrs. Olivia Matovo from Legal Mark Advocates, trustees of Bank of Uganda challenged the tax on members' benefit, which in a further assessment had risen to a liability of 40.9 billion shillings. Bank of Uganda runs a defined benefit scheme where employees contribute 4% of their salaries, while the central bank makes a 17.1% top-up. In the case, Bank of Uganda had urged that the defined scheme is a settler trust and taxes should be charged on the settler. A settler trust is one where the settler has a revisionary interest, meaning it would make any surplus derived from the scheme and would also pay any deficit pertaining on the scheme. However, URA had urged that the scheme is a retirement fund and is regulated by Bank of Uganda Retirement Benefits Regulatory Authority. Therefore, any income derived by it is taxable. Income tax applicable to trustees and retirement funds is 30%. Genesis Namalu, STV, Select Business.